Hello, everybody. So today is one of these days where I lose respect for the Wall Street profession and the traditional market because I think the market is absolutely crazy when it comes to e.l.f. This sell-off minus 25% after our yesterday, after it fell off a cliff, literally. And you may remember my hesitation because of the tariff fears. Little did I think that it would be a tiny change in outlook that would bring the stock down, not tariff fears. Tariffs were not even discussed on the call if you follow this stock. No, it's just a tiny miss on EPS that led to this 25% drop. It makes no sense to me. Now at 69, I can confidently tell you I'm loading up on that stock, and I'm getting some SoFi vibe. Some of the analysts on the call, even some of the female analysts on the calls, were dismissing them, saying, "So you just copy the main brands and the CEO had to defend the company." Oh, this one looks juicy to me. So let's go. It's a full analysis, perhaps a little longer than usual, but let's go. Let's talk about it, and let's talk about why I think the stock is cheap. So let's talk about market share. They use a lot of data from Nielsen, which I guess in retail is kind of the god of retail data or something like that. So they measure their market share based on Nielsen, and they've had 24 consecutive quarters of net sales and market share growth, which is very rare, and they're actually one of one out of 988 brands to show this 24 quarters of market share growth. And so even though the category down, the share is still going up. If you follow other stocks, you may remember Transmedics. That was a criticism for Transmedics a few months back, that the share didn't go up when the market was down. Well, here the market is down, but the share is going up. So this is a green flag already, a good sign. Let's talk about more. So net sales growth. So FY25 to date. So that includes all of 24 and then the 3 quarters of 25. They're in Q3 25 right now. They have a upside down fiscal year. They just reported Q3 25. It's plus 40% in sales growth. And the outlook, in addition to a slight miss on EPS, this outlook is also what apparently stunned Wall Street. But 15% over the second half in growth. To me, if you do that twice, you're at more than 30% yearly growth. So again, I have a hard time understanding that. At the end of Q4, when they report in May, they will still have that 15% growth for half a quarter, which is more than 30% if you compound that over 4 quarters, 1 year. So anyways, I have a hard time understanding that. The products are doing well despite a slowdown in the category right now. And the slowdown apparently is due to social media. You may be interesting. You may find that interesting to find that a lot of makeup sales are driven by social media. I know that from another stock I own, which is Oddity, who sells their makeup mostly via social media. Social media was all taken over with the disappearance of TikTok and TikTok going away, and then the wildfires. Apparently, there was really just a few topics discussed in social media and less engagement on the makeup ads and the makeup content. So that's why they say they've had a little slower sales. I believe that personally. Anyways, moving on. So we have 4 areas of growth. Cosmetics is the oldest one, and cosmetics is often what this company is only thought of. But this cosmetics takes 3 iteration. They should really have written here retail cosmetics, right? And that's the retail cosmetics, and you find that in so many different stores. But they have digital cosmetics, and this is where I went on Amazon. You type e.l.f. on Amazon, you have all their products showing up. You even have the reviews from their questions showing up. This is an example of a products that they sell on Amazon. So for example, this is $3. You can see 54,000 reviews. So what? Typically 1 person out of 10 leaves a review. So that's more than 500,000 of these. Sorry, what am I talking about? 5 million, more than 5 million of these pens have probably been sold. Probably more than that. Moving on here, you have skincare. So they're launching skincare, which is a big market for them. Again, this is also part of their, trying to sell to men, which is a big goal of the makeup industry in general. So that's another aspect. I'll get to that in a section in a second. But they're showing they're growing skincare, and they have international. They're going international heavily and entering in new countries. My last video on e.l.f. I might have discussed Germany and them entering Germany with Rossmann. They played an ad on the call that they do their 66% sales growth internationally. So international is growing twice as fast as domestic, as US for e.l.f. Moving on to the data. Again, the category is down 5%. This is all Nielsen. e.l.f. is up 16% in Q3, while the category is down 5% in Q3. So the other customers are bleeding away from the L'Oreals of the world and the Estee Lauders of the world, and they're moving to e.l.f. And this is consistent with the younger generation picking their top brand. And we'll get to these surveys where e.l.f. is the top brand of Gen Z, of millennials, and of Generation Alpha, who are currently teenagers, which is stunning to see. And again, they are trying to they are the number one is in volume. They sell the most stuff, but they are only the number two in dollars. They want to move to the number one in dollars, in addition to being the number one in volume. But of course, when you are at a low price, when you're well priced, you really got to have a lot of volume to be number one. To me, this company follows a lot of 0 to 1 concepts. Make the product cheaper, make the product better, and in the case of makeup, it is better because it is cheaper, and it is also better because of the brand, and the brand resonates with a lot of the youth. If you can see at Walmart, they moved from number 4 to number 2 position at Walmart, so that's pretty stunning. They have a lot of sell-through in these stores. I mean, and this if you know this brand, this is a brand that really got started at Target. They weren't at Walmart for the longest time. They're entering Dollar General, so Dollar General could be huge in the United States, especially in rural areas, and they have a lot of sell-through, like I said. So productivity is, how quickly do you sell the product? They are the product with the most sell-through. The products do not sit long on the shelf. There's a lot of sell-through, a lot of reorder happening. In the skincare, they seem to be reiterating the same feat, moving up in skincare, being the number 10 skin brand in skincare. And again, the category roughly flat for skincare, but they're up 4%. This is a small market for them, so the market is obviously not noticing that segment just yet, but it's good to note that they are working in there. And if you look at some other aspects, so like I said, based on the Nielsen survey, they're the most purchased brand by Gen Z, millennials, and Gen Alpha. So you're really getting all of the customers of the future, right? And as women get older, and the later range of the customers, these older brands are gonna die with their customers. If you ask me, is the fear that I have. There's no renewal in recruiting all of the customers, and if all of the customers move to these digital native brands, this is what we may see. Like I said, the product is inexpensive. Noteworthy to say, they're launching sports makeup or something like that. So again, this is part of them trying to sell, to men. It's probably a lost hope anyways, but it's teeny tiny market. But they're doing sports makeup, and this is perhaps the most important one: unaided brand awareness. So what is unaided brand awareness? Is when you ask people, oh, why don't you name makeup brands? Why don't you name a few makeup brands? And now they're at 33% unaided brand awareness. So they're getting close to L'Oreal. So they're going to be close to be one of the brands that is first mentioned whenever you ask a customer, oh, tell me about a brand of makeup. So that means that they are becoming a brand. They're not just some unknown random name, and thanks to that, they may be able to raise their prices slightly over time, especially as a youthful customer gets into their earnings years and starts to make money and starts to want to spend money on makeup. Moving on to the sales. So as you know, on my channel, I only care about product adoption, which is why I'm very excited about this company, because there's clearly adoption. And when I look at product adoption, I'm happy with what I see. So trailing 12-month growth is plus 31%. They are predicting for FY 2025, and they only have one quarter left in that. They are predicting 27 to 28% total. So a slight slowdown. But I will mention that despite them predicting or guiding conservatively, you can see they have a history of beating on revenue, and you can see the EPS minus 2.55%. To me, that's much of a drop. But they have a history of beating on revenue between 4 and 10%, depending. And so I expect them to beat that guided revenue growth number, maybe by 8%, 5%. I don't know, but it could be closer to 29 to 30% because they have a history of beating. The gross margin is very stable at 71%. That is excellent. And then the marketing and digital outlook. So they're telling us they're going to spend 25% of their revenue on marketing. I don't think that's a lot for a growing brand. You may see me cover Hims before, and I'm unfazed when I see that Hims spends 50% of their revenue sometimes on growing the brand. So to me, this number is not shocking. Now, if you're a traditional analyst, you're going to think this is a shocking number, but I want them to grow into, to invest into growing the brand. That's important. That's how you get revenue growth, and that's how you get, companies that at the end of the day end up producing outsized returns, because if the price to sales remains constant over the long-term period, then the stock price is just a price to sales ratio. And so if you assume the stock is going to be stuck at a 3x price to sales, but sales grow 30% year after year, well, guess what? Your total returns are also going to be 30% year after year. The sales growth is going to be pretty close to the return growth if you hold the assumption of a price to sales being constant. And so I want them to invest in that marketing, in that growth, in those sales, in order to drive those sales. The revenue looks like this, and this is, I think, the slide that requires the most attention, because in my spreadsheet and in the comment section, I hear your comments all the time. People tell me, oh, your estimate is too high, your estimate is too low. And so e.l.f., of course, in my prior analyses, you might have thought that I had too high of a number. So this time, let me drop the number and actually come up with a valuation with a number that I think is realistic. So December 2024, what they just reported, they did 355 million in revenue. You can see September 2024, they had 301 million. June 2024, they had 324 million. So when I look at this revenue curve, you can see it here, I see a growth with unabated. The growth is still there. It may be spotty again in the March 2024 in Q4 for them. It may be a little spotty again, but the general trend is there. You can see the sales kept going up during the holidays, as they usually do during the holidays, but they overcame the September 2024 slowdown anyways. Okay, so that's point number one. And then the analysts, all I want to say is, come on, analysts. I don't understand. So they're saying for March 2026, so next year, so 5 quarters, and that's 4 quarters starting in 1 quarter, they're saying they will achieve 1.47 billion in sales. I'm like, come on, analysts. Do you really believe that? Because if you say it's 1.47 billion in sales, that means that they are pricing in 12%. This is plus 12%. Analysts are only saying plus 12%. So they're going to go from 28% to plus 12%. The slowdown is going to be that pronounced. This much of a deceleration. I don't believe that. I think the analysts are overly negative on this one. And not to mention, they have a tendency to beat on their revenue. Like I said, they beat 4 quarters in a row. So assuming 12% and assuming consistent beats over 4 quarters, I'm going to assume they beat consistently, I think it's reasonable, it's a fair number to assume they'll grow 20% over the next 12 months. So in my spreadsheet, I input a 20% right here. And by inputting a 20% right here, what do I get? I get an enterprise value over revenue growth over gross profit, over revenue growth. How much am I paying for that growth of 0.22? 0.22 is really cheap. It's not the cheapest I've seen, but it's really, really cheap, especially for a number one brand, a number one in that category. And, that category has a lot of benefits. It's direct to consumer. It's not dependent on the interest rates. It's a lot of volume. It's very much like a recurring revenue. Because once you're out of makeup, you just go buy more makeup. Women do that, and so all of that sort of stuff. It's got a lot of good things going for it. And the rule of 40 is there out of 43. The rule of 40 is a 43, which I'm also pleased to see. So I find the stock very cheap, and I am buying the stock. And let me conclude briefly about the tariffs. They know exactly what they are going to do with tariffs. They have supplier diversification. They started doing that in 2019. But this is what I've discussed before in the tariff. So they're going to do some cost savings on their side. Of course, they don't say margin compression. They would call it cost savings, but you could expect the margins to go down a little bit. Price increases, okay, and then supplier concessions. These are the big parts of the playbook. Then, of course, moving to other suppliers, selling to other countries, right? If the US has a tariff on China, it doesn't guarantee that Germany will. Right, that's the thing. And remember, close to 80% of our products are made in China, and then favorable exchange rates, and that's the big deal. Is the yuan going to go down? Are the Chinese going to let their currency go down to absorb tariffs? And my guess is that that's kind of what they're going to do. And so I don't think this is a major threat. So hopefully this gave you an idea of where I stand on e.l.f. This was not investment advice. This is not financial advice, obviously. This is entertainment, and I hope you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful, wonderful day.